Good day. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Wednesday, the 18th of December, 2019, getting on a 4:35 in the afternoon. So we've got the settlement prices and everything in. Pretty flat day in the stock market. Some might say that the market's holding the gains. I wouldn't argue with that. Metals backing off a little bit. Gold seeming to have some trouble here at the 1480 level. We'll see if the market can ever get through that as we get into the quieter times of trading now. And what do I mean by that? A week from today, it's Christmas. So for all practical purposes, you're going to see a lot of traders out next week. Then they'll return or still be gone through the first week of January, and then things get somewhat back to normal. I think you appreciate that. It's not my take on the market. It's just what goes on as we get into the holiday season. I already see it everywhere I go. And in the metals, what's happening in the gold is people are starting, and I'm seeing the year-end projections. Can gold go up? One company's saying $1,600. Another says, nah, you can still go back to the $1,350 area. Don't know. What I do know is if economies keep printing money, that at the end of the day should have a benefit to gold prices. Now, gold's going to fight higher interest rates right now with the improved trade deals. It certainly takes a backseat to a stock market that has never given us a break in 11, 12 years other than snap breaks, but it's basically been a bull market for the longest one my lifetime I've ever seen. Will the market eventually peak out? As sure as I'm talking to you, it will. When? Don't have any idea. Until a trend's over, it's not over. So the question is, can the metal markets get something going? And right now the answer is they're neutral. If you look at gold and you look at a close-only chart on a weekly basis, I don't think you'd argue with me that the market, since all the way back here after this break, when you got down to in November, since November 8th, and this is a weekly chart, has just been drifting back and forth with the market, not really going anywhere. The negative is it has stayed over this key number, to me at least, the 18-week moving average of closes. A close over that, I think, would get the analysts taking a look. Gold's starting to move to the upside, and that could spark the seasonals and so on. But until that occurs, you still have the downside bias because you're under that number. When we take a look at the action here, it really spells itself. You had gone from this area in October, actually it was longer than that, it goes all the way back into the summertime months, and then the market had come down, found a trench in the 1490 level, then it let loose one more time, and from the 1490s it went to the 1450 level, and it's been stuck in that $40, $50 range. That's what it's been doing. Now the question is, can it come out of that and which way? As I've said before, and when I did my metals video 3 weeks ago now, I was looking for exactly this, and this is all fit in, and then I said, at the end of December, I will not be surprised if the metals start trying to move, especially gold, to the upside. Haven't done it yet, but we're not at the end of December either. It's the 18th. As you can see, the pattern is right now one of lower highs and higher lows. So you got a market that is doing this. It's narrowing in. Where? On the daily chart. Literally against what I call that line in the sand, the 18-day average of closes. So that's where you're at. The market is now stalled, trying to figure out what next. The interesting thing is I just said it has to get over that 1490 level. At 1501.60 is the 100-day average. So within that zone, you can see where the resistance is. And I also look at Bollinger Bands because they give me an idea. And what the market's been recently doing is making attacks on the upper Bollinger Band. It missed it yesterday. It did not get to it. But it's had 2 recent attacks. It has not, since the early November break where we went into the new range, gone to the lower Bollinger Band. It seems to just be stuck here. And like I so often try to teach you, when Bollinger Bands go sideways, think of a pipe, because it starts forming that with these top and lower bands, and the market just spins around in that part of it. Eventually, the pressure of that price will break the market out. And when it breaks out, it will either get overbought right away or oversold. You have to respect the pattern and understand the pattern more than the momentum at that particular moment. As you can see in terms of our momentum, it's flat. So I have a market that's in an uptrend, as defined by the fact that you've got the higher lows, you had the higher highs, the legacy's there, but I recognize and appreciate that this market is stalling and might hang around that 18-day average. The bias is up because you're over that, and momentum is flat as can be. When I come to GLD, it's really no different. A little difference here is you're overbought. Any reading in slow stochastics over 70 is initially overbought. You're not there in the futures market. That's the point. But where'd the resistance come in? Right at that upper Bollinger Band. So the analysis I'm giving you where I'm expecting the resistance is still there. Now, if this market can lift up into that zone, it'd get very interesting very quickly because, as I said, it's not unusual if you start breaking out one way or the other to either get overbought or oversold. You're already overbought. Can you lift with it? I don't know. Neutral is 138.27. Take out 137.98 and you have a problem because you've already got the lower highs and higher lows. So break under that and you actually start a mini downtrend, could carry to 136.83 zone. So watch. What about the gold-silver ratio? Neutral. It's pulled back like it did before to this 18-week average, and it's just hanging here. It's not showing gold advancing on silver or not. It just sort of hung. It went back up to 88. The bigger picture is that the market had been coming down in waves. You had one burst back up, and it didn't take out this last up wave, and now can the market start a down wave? That would give silver an upside bias. Part of me says, okay, if world trade's getting better, wouldn't that benefit copper, silver, markets like that? And it could, but you got to think the whole thing through. Let's take a look at GDX for a minute. We were talking yesterday. That's not where I want it to be. I want to be on this one. The market is lower highs. And yesterday the market was making its run at the 18-day average. Today it got there, and by the end of the day at 27.45, it hit it and it closed over the market. So we're seeing that the support came in on the first challenge of the 18-day average. What is the trend? There isn't one. You have lower highs, lower low, but you're closed with the market over the 18-day average there. Therefore, the bias is up while the swing line is down. We've seen that the 100-day average is offering resistance and momentum is still down. And when I come over to the GDX, momentum is down. Unlike the GDX senior, the juniors, let's leave it that way, the 100-day averages come into play as support. Here, the 100-day average, at first resistance, and on rallies, more resistance. So a little bit different game going. If the market extends to break, I look for the 18-day average to be supportive. However, you're in a downtrend in the swing line. So while the bias is up, the swing lines are down, you don't have anything to hang your hat on. That's the point that I'm making. In the silver market, whether you believe that, like I do, that there is a line in the sand traders look at, I think the market's been hanging right there for a week and a half, just hanging at this 18-day average. The swing line has been higher lows, and now you got a lower high. Why? If you look at yesterday's high of 17.17, if I'm right, this is higher. Yeah, it is, 17.18 and a half. So like the gold market, even though the swing line is up and the bias is up in this market, it's paused. If you can take out 17.17, I would not be surprised you make a run for wherever this Bollinger Band comes in tomorrow and the 100-day average. That'll be the resistance points. Take out 1689 and a half and you start a downtrend because you've already got the lower highs. That would give you lower lows. We're at real important points in these markets. In the copper market, you still have the embedded reading. Now, embedded means you've already converted a market from being overbought and locked in a trend. So on these breaks, I'm still looking for the pros to be buyers of the market. And if the red line closes under 80, I go back to the drawing table because then I would not be surprised to see price and the 18-day average make a run at each other. Admittedly, we are going to wake up one morning and get the details of the U.S.-Chinese Phase 1 trade deal. We don't know what it is. It could not have been 5 minutes ago that we had papers in our hand in this room in my studio, and we were talking about U.S. trade, the biggest amounts that the U.S. buys from China, and how it just dwarfs what we export to them. I mean, you can take your airplanes, throw that all together, and if you go to the communications area, it's more than what we do. And then you throw in the PC part of it and the handheld phones. Those alone dwarf everything. I didn't realize how big exports to the U.S. in tricycles and scooters and things of that nature are. Amazing. I just saw the report. Amazing to me. But in looking at where we're at, you still have this market locked into a bull trend. Admittedly, it's gone into a pause like gold. You have lower highs and you have the higher lows. Now, if you take out 278.15, you extend then the swing line, it starts turning down, but you're so far over the 18-day average of closes, you know, can you get to that number? And that 18-day average is jumping at the tune right now of about 75 points a day. So it's going to be tomorrow closer to 273 than it is where it's at right now. In the platinum, we're in a pause. You can see how the market's got lower low, and today you rallied up over that high. So you've gone into a stall in the market. You've got good support between the 18 and the 100-day average, but like so many of the other markets right now with these holidays, with the impeachment vote tonight, you've got one set. Tomorrow we get a vote on USMCA, so the market will have a different psyche once the impeachment vote's out of the way. In the palladium market, you lost your embedded reading, and to me, that's what I look for. The market yesterday started with a reversal. Again, how many days have we hit that Bollinger Band and just run into that zone of a problem? Now, in losing the embedded reading, it tells me to be on the lookout for price to make a run at the 18-day average. And no, that's not bearish. The market still has the pattern of higher lows, higher highs. We're in that corrective mode like all these other metals are right now. The dollar climbing, and as the dollar climbs, it puts a bit of pressure on everything. The 10-year note today, the last I was looking, was over 192, getting close to that 2% level. Wow, we were in market 144 this summer, right? So the market's come back. Lower highs, lower lows, interest rates going up, a little bit of support there. Boards are now closed as the market gets ready for the 5 o'clock reopening. I want to remind you, we offer these different indicator videos to teach you how to work with some. One of them that people should learn more about, in my opinion, is the Arun indicator, simply because it ties together the concept of price and time. And you're looking to see, it does a market like a swing line does, continually run. And when it's running, is it making higher highs, higher lows? So my videos teach you, and most charting software packages have it, how to plot it. Then I explain how to use it. Of course, that's the key to it. And then what it does. And when you learn these different things, all you're looking for is verification that maybe a trend is at work and staying at work. That is what I take out of the Arun indicator. If you'd like to learn more, as I said, it's a video series I created. It's free to you. Go to our website under free offers, sign up for it there. You can click up here if you're watching me on YouTube, and we send this all out by email to you. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.